Okay, folks, welcome to Thursday Night Stock Charts Live. These Thursdays go by like this. Every time it's a Thursday, I'm saying, I can't believe it's another Thursday. We're going to go over weekly charts, and what a day it was. Before we kick things off, I'm going to ask if you could just please smash that like button, destroy it, subscribe to the channel if you haven't already done so. I'd really appreciate it. A lot of comments in here already. Cool. Good stuff. All right, so today we're going to talk about, obviously, the weekly charts. We'll talk about how this was in the cards. It was expected, and we've discussed it. There was a lot of speculation, a lot of froth. Do I believe that this is the double top that we've been looking for? I don't know. And there's a reason for that. And I'm not 100% certain yet. I'm not sold on the idea. And add to that, I did not feel the panic that one would have normally felt on a down day like this. So I would love to come on here saying that I believe this is the double top. You got to get short the market. I don't know yet. And that's the most honest answer that I could give. So my suggestion is that we do not panic. Do not panic. We'll get through this. Let's talk about the indicators by the market. We have been watching the VIX. I always say the market sends you signals. The VIX was sending us a signal for the past several days. The S&P 500 was up on a couple of days, and the VIX was up too. And that normally doesn't happen. And I've said the last time we saw that was just before the big correction back in February, March. And here we are again. So add to that, I'm going to come back to this chart. Add to that, you've seen names, bankrupt names. HTZ. Hertz. It was only down 18.25% today. It's bankrupt. Names like, what's the other one? Chesapeake. That was, it was up. It was up today. You have to love it. So this kind of tells me that the speculative froth is not over yet. Unless there's a news item out there that I don't know about. That's too much. I got to look into that. What else? Duo. What happened with this thing today? That was down another 20%. This is a pure pump and dump play. And it's fallen pretty much back down into its base. So a ton of froth out there. You had the VIX sending you signal, a lot of amateur money. Record volume on Robinhood. Their systems kept going down. They couldn't handle it. You think they have it fixed by now? These are all signals by the market. So do I think that we're done going down? In the short term, maybe not. But I would defer to the weekly charts. And that's why we're here tonight, to get a feel for how we're closing out the week. And the one thing that we've learned, and I say this every single Thursday night, is that while we may only have one trading day left to go in the week, that one day can make a big, big difference. And we talk about it on Saturdays when I go over the week ahead commentary with members, and we take a look at the closing picture of the markets. And that's how we formulate our game plan as we proceed into the new trading week. And then we talk about our positions and watch stocks. 14-day free trial offer. Plug. Moving on. So what makes me nervous about this market? I asked my son whether or not I should do this, but he said, no, don't do it. It may be insightful. And I'm going to do it anyway, because the hell with it. Got to be entertaining somewhat. So I was going to come on tonight because I had this green screen. Hey, Kat, Oliver. I didn't say hello to everybody. That's rude. TA, I know you're on. I got your email, TA, Bitcoin, Chuck. Good evening, brother. NY Jets. Yeah, Steve Miners is on. Have large gold and silver position. Even gold and silver sold off today. Is the DXY oversold? It was yesterday. I expected last night when on Market Wrap, I said, expect a pop here. We're probably going to pop. We rallied today. Franklin, hello, sir. Good group. Good group. Familiar names. Good stuff. Okay. So what keeps me up at night? Today we had a, I was going to change my background. If you folks are socially insensitive or sexually sensitive, you may want to close off right now and go to a more family-friendly channel, I guess, because this is a problem. What you're seeing in the background right now is Seattle. There's a new no-go zone or whatever they call it. They have their own warlord. And I'm not going to get political, but this is a problem. Here, Seattle, autonomous zone, now has heavily armed warlord and crime spikes 300%. I don't know how they know that, since they don't have a police for it. I don't know how they can measure crime anymore. But this is a spread. This is a cancer. You had a general on the Joint Chiefs of Staff today come out and apologize for being in a photo op in front of a church with a Bible in his hand with the President of the United States. You had the Defense Secretary last week saying the President shouldn't do what he's entitled to do, what he has an obligation to do, which is to secure cities. You're seeing people hedge their bets, and these are generals. And this is a scary proposition. This is a well-financed operation that's going on here, and at some point in time, they're going to realize the only way that you are going to allow, you're absolutely right, Franklin, he should step down. Absolutely right, sir. Or Trump should fire him. He should be ashamed. Scoundrel. I digress. So, we have a well-financed group that wants to take down the president and Pence, Vice President Pence. I don't want to be disrespectful. And they're going to have to realize at some point in time, if they haven't already done so, the only way to do it is to nail the stock market. Now, last week's riots didn't do anything. The markets chugged up higher. What's next? That's what worries me. And these are well-financed people, and they are desperate. So I'm nervous. I am very, very nervous. But I'm not going to panic. As a matter of fact, let's see what's going on. I'm going to play around here a little bit more. Here's the background of what's going on over in that zone. They're watching movies outside. It's really a great place. So anyway, let's go to the charts. I don't want to get political, but this is a problem. I don't know how anybody can deny that it's a problem. It's a problem. They're trying to wipe out Western culture, and it's a sickness. Now, why am I not freaking out about the market today? You know, every Thursday we talk about, hey, Pat, we talk about Rick Roofing, Larry, hey, the yield curve, right? And just to educate people, this is a chart of the yield curve. And, excuse me, and when the yield curve inverts, as it did back here in 2000, it went negative. You had a big sell-off in the stock market. It wasn't immediate, but it really happened when the yield curve inverted. When yields started to normalize, that's when the stock market rolled over. And the same thing happened here back in 2006, 7, 8. The yield curve inverted. The stock market, which is highlighted in blue, should have said that, my apologies, highlighted in blue line chart here, overlaid over the yield curve. When you get a steepening of the yield curve, the S&P 500 rolls over. Now, this time last week, we were trading at the high. This is a monthly chart now. We were trading at the highs of the month on the steepening of the yield curve. It was a very, very bullish chart. Where are we now? We're at the lows of the month. The inversion is again resuming. So the steepening is no longer occurring, and that should be bullish for stock prices. Now, the problem, there's a saying that I like to use, and that saying is, the test is always at the top. Meaning, as we approach new all-time highs, and again, overlaid here in blue is the S&P 500, the question is, do we rally up and through and take out prior highs, or do we put in a lower high, fail, and break down to new lower lows? That's the $600,000 question. We don't know yet. What do we know? Well, Jay Powell, we know, is FOS. We know that. He stated yesterday on his press conference, or during his press conference, that the Federal Reserve would not invest taxpayer dollar into companies not worthy of their investment dollars. However, he invested in high-yield bond funds, which were invested in none other than Hertz, which has gone bankrupt. So he's a liar. Now, he did forecast out that there will be no rate hikes going into late 21, 22, and I believe that because they can't. You got to keep in mind, there is no exit for them. The last time they tried to exit low yields, declining yields, the stock market was okay up until we got around 2%, and then it rolled over. That threshold of pain at which the stock market is going to buckle is probably now at 1.5, maybe lower, before it can no longer take the pain. So he can't, despite all of his rhetoric, bravado, there's no exiting this. There's none. It's not going to end well. In the short term anyway, the yields should help stocks. There should be a put underneath the stock market. Maybe I'm wrong. Let's take a walk through how we are poised to close out the week and see whether or not these charts change my mind any. However, as we talk about them, remember, one trading day left to go. We'll go through these, then I'll take a few stock chart requests. I need to go to members first, and if I have any time left over, I'll go to those with the super chats and those who are requesting symbols as well. Trisha, hi, Trisha. Good to see you. We have two ladies on, Kat and Trisha. Too bad Janice wasn't on. That would be great, too. I had three ladies on at the same time. We need to broaden out our demographic. Manoj is on, too. UTSI, stop loss. All right, yeah, we'll go with that. You got it. Denny, yeah, wild day. All right, let's do this. Okay, for those just joining in, if I could ask you to smash that like button, I'd really appreciate it. Helps me out the YouTube algorithm. And these kids, they get like 30,000 views for, I don't know, cat videos. All right, bonds. So we know about this, right? This is the TLT 20-year bond price. It gapped up yet again today. No great shock. And yields collapsed, as shown by the yield curve. Volume rose. This is going to continue. We're probably going all the way back up here to 166 on the TLT. The tips. Now, here's where I was kind of surprised today. And I could rationalize it in a moment. Just want to see how we close on a daily basis. We were up. We closed off the highs of the session. Let's go back to the weekly chart. Now, silver and gold sold off today. What that tells me is that you had a lot of traders out there that got hit with margin calls, because usually you're going to see gold as a safe haven play, as was the dollar today of all instruments. Sorry. Okay. All right, so wrong chart. So we have a bullish reversal week, a new high. We're very close to putting in new all-time highs on the tips. What are tips? Treasury inflation-protected securities. When they rally, people are expecting inflation. What does well in a high inflation environment? Gold, silver. So they sold off today. That's an opportunity. All right, so we're going to be looking to buy more gold miners and silver when the time is right. We'll go to those charts in a moment. Now, I want to go to, let's forget about the dollar bull ETF. Let's go to US dollar. Let's go with a monthly chart. Now, on a monthly basis, very bearish month so far. I want to keep things in perspective because I'm going to talk bullish for a moment about the dollar, but not quite yet. So this month, we have broken down below critical support at 98 on the Dixie, the dollar basket. Now, on a weekly basis, we've bounced off of support, 95, spot 5, thereabouts. Daily chart. I thought we were up today on the dollar. The dollar bull ETF. Oh, this didn't update yet. That's why. Stockcharts.com is funny that way. Yeah, this is yesterday's closing price. I thought I was losing it. Okay, cool. We'll use the dollar bull ETF for the weekly view. Because they had a big update today. So this is a weekly chart. You can see that we are still down slightly on the week. However, we're off the lows. I'm still bearish on the dollar. Look at the Stokes, very weak. When you see this, both lines on Stokes trading down below 50, rallies tend to fade. Let me get rid of that Seattle background. I hate it. Let's bring up something patriotic. There we go. Now I feel at home. All right. All right, the Dow Transports. Weekly chart. Crushed. This is bad. This is an outside reversal week. If we close where we close today or worse, you're almost assured of a down week next week. Unless, of course, we close out the week down here at 8,600. That's support. But this is not good. I mean, we recaptured support last week here at around 96.76. Thus far this week, we failed to hold it. One trading day left to go. We have to keep an open mind, not panic. You know, when you have your positions gap down through your stops, you can do one of two things: bail out at a market order, or take a breath, see how we close, reevaluate, and refine your strategy. What did we do today? We were short of Microsoft going into the day, so we did book profits on our short of Microsoft. It closed at support. I can bring up that chart if anybody's interested. And we bailed out on Costco. I didn't like the price action on Costco today, so we stopped out on Costco. So we have other positions where they just gapped down through our stops, and I wasn't going to get taken out in a panic sell-off. So we've stayed small. I've been coaching to stay small with positions, have a pile of cash to act, and that's what we're going to do. We're going to be looking to take advantage of opportunities now. So I didn't like what happened today. We saw some really good breakouts yesterday on LABU, on Intercontinental Exchange. We were watching those, hoping for a follow-through today. It didn't happen. It was bad price action all the way around. Except for Chesapeake Energy. It was up today. And Smith & Wesson. The Dow Jones Industrial Average weekly chart. So far this week, breakout point failure. We recaptured the 27,000 mark, failed to hold it. In all probability, we're going to move down here to retest prior support at around 24.8. Where do we close? So we have about 300 points or so to go. Lower highs here on Ultimate Oscillator. IWM was just annihilated today. My charts are all messed up today. I mean, we broke out last week and closed above 2 resistance levels on the week. This week, we smashed through 3. We did have a gap that opened up the week of May the 26th. Could this be a filling of that gap? Maybe. I'm not a big filler of the gap type of guy. Meaning to trade off of as a speculative entry point. I prefer historical support levels. Volume was big today, but not outrageous. It wasn't outrageous volume. The price action was absolutely horrible. On a weekly basis, horrible. Let's go to a daily chart, check out daily volume. That's horrible volume. This is the second or third highest volume bar of the year. So it looks like we're probably going to go lower. Everything's on daily. Why is everything on daily? Weekly chart of S&P 500. Outside reversal week. This is what you're seeing across the board. So we took out the highs of last week, unable to hold. Now we're back down below support. That 30-50 mark is really critical support, and it failed. Now 3,000. We did manage to close above 3,000. Will they defend it? We're going to need to see a gap up tomorrow. Or they're going to gap it down, try to reverse it off of 29.50, and then try to close it above 3,000. Same setup here on Ultimate Oscillator. Lower high is what you're seeing on the Dow Jones. Same exact to the T. The banks. Now, I warned about the banks before yesterday's announcement, because what we were seeing, and to be fair, let's bring up yields for a moment. Indulge me. For those not familiar of the whys behind yields and the financials, why you watch them very, very closely, it's because yields trade inversely of the financials, which is counterintuitive because you think that stocks go up when yields are down, but not the banks because it hurts their NIM, net interest margins, the money they make on loans. Now, last week, we had a massive, massive breakout on yields. And the markets are still able to rally. I was impressed with that. This week, we gapped down. Markets still rallied. But look at this. Look at this reversal bar. And we closed, we'll say just at support. This is like the mother of all reversal bars. This is a tug of war between the Federal Reserve and the bond vigilantes. And I warned about this gap down because we wanted to buy the banks. And I was even looking at Goldman Sachs. Goldman Sachs rallied through 200. I said, you know what? I'm not chasing this thing. And sure enough, the banks have been hammered over the head due to that reversal bar. Let's check out Goldman. It's back down with a 1 handle on it. Thank God we didn't chase this thing. Thank God. So the banks are not looking good. Technology, after putting in the new all-time high, the XOK did yesterday, Again, we're on a daily chart. I must have pulled up the wrong chart list. All right, so here we are. We're at a critical juncture, and this is why it's so important to watch the weekly charts, multi-time frame analysis. If you're new to trading and you're focusing on intraday charts or even just daily charts, if you're a swing trader, you're going to lose money. You need to take a step back, take a look at how you're trading on a weekly and monthly basis. What's my trend? And if we close out the week below 97.50, where do we close today? 98.14. Technology sector is in big, big trouble because we had broken out last week cleanly on light volume above resistance. This week, after putting in a new all-time high, there was a rejection, and we have a bearish key reversal. And if we fail to hold the support level, that is a bull trap. That's a breakout point failure. And what you normally see when that occurs is a retracement down to prior support. That would be down here at 94.33. And many times that support level breaks. So when I say I don't want to panic today until I see how the week closes out, this is what I want to see. Do we get a defense of the support levels, or are they abandoned? Are there not enough buyers out there to defend these support levels? If that's the case, well, then we need to pull in our horns a little bit and then plan on shorting into any counter trend rally after we identify where there's going to be resistance at which we're going to want to short into. So a lot to think about here as we develop our strategy moving into next week. Emerging markets destroyed today. We booked our profits in BRZU last week. We did about 44% on that. And it's back down below where, what did I type in? The wrong symbol? Dummy. Yep, you did. Okay, so it's back down below where we got out, which is always nice. I think we're going to probably pull back further. We bounced off of support at $70 a share. This is a commodity play. So we need to keep an eye on oil, gas, agriculture. Agriculture, I do not believe did well today at last check. Yeah, the ag names were down today. My little egg company was down today too, but off the lows of the day. This is Cal-Maine Foods. Doji Star Formation. I'm tempted to buy more here. The reason why this stock was down yesterday was because the Texas AG, Attorney General, came out and charged them with price gouging, and the demand out of the AG, I never heard of such a thing, is $100,000. At first I thought it was $100 million. I'm ready to press the sell button. And because this is a small egg company. And it's $100,000. I thought I was seeing things. And so they'll settle that. That'll be nothing. My only worry is other AGs coming in from around the country trying to hammer the company. And then they have to lawyer up, and then it's a mess, and you want to be involved with that crap. So I'm tempted to buy more here. We're holding 42.04. Where do we close? Oh, no, we closed just below it. Yeah, we closed just below it. We need to see if this could battle back some. I don't want to buy right now. We'll watch it. Maybe adding more. And the reason why, folks, if you're wondering, hey, what's this guy's love affair with an egg company? I mentioned earlier about multi-time frame analysis, right? Understanding where a stock is on I said a weekly and a monthly basis. On this trade, it's a quarterly basis. Now, we have how many days left? We have about 3 weeks left. So we could rally back here. So we were very close to taking out the prior quarter's highs as of 2 days ago. That Texas AG SOB stuck it to me, and we were back down below the breakout point. So I still like the setup here. If we manage to rally back, turn positive again on the quarter, we'll be looking to load up, especially if we break out to a new quarterly high. So that's the rationale behind this trade and why we're sticking with it, because it has history and legs. Energy destroyed. No great shock. You know, we closed out the day on energy here, and I always say this to people, and I wish people would really respect this a lot more. When you close up and into the third standard deviation Bollinger Band in red, you gotta look to book some profits, not enter, do something. Just don't sit and wait to get hammered, because as sure as God made green little apples, it's going to get pulled back. Here's Microsoft. This is the reason why I shorted Microsoft yesterday. We went into the day long of Microsoft yesterday. We booked profits, and then we went short because it was poised to close out the day above this third standard deviation Bollinger Band. We booked profits today because we closed. If you take a look at a chart of Microsoft on a weekly basis, where is it? Here it is. We closed right at support. So we had broken out last week. This is very similar to the XLK chart, right? We broke out last week, a new continuation move higher this week. Now, a reversal bar on the week. And keep in mind, I'm going to go back to this because it seems like I do it every week now. Keep in mind where we're at with Microsoft on a quarterly basis. RSI over 90. And on a yearly basis, 92.52 on RSI. Nuts. And we're leaning into the third standard deviation Bollinger Band. But guess what? We've been here for 1 year, 2 years, 3 years. This is our 4th year leaning into that Bollinger Band. But this is unsustainable. Oil. Again, a daily chart. Down nearly 9%. An inside week, no new high, no new low. Volume's rising. I wouldn't short it. I wouldn't buy it. Our natural gas trade was up today. That's always nice. I think that's what kept me sane. Gold. A down day. We were up earlier, but a reverse to close down. Now, I think that this is going to be probably one of the last opportunities to step in and buy gold. You can see we have a breakout point failure here. We broke out on the 10th. This is a daily chart. Today, we failed to hold that breakout. Still flashing topping action. And you may be saying, why? Why is gold not ripping right now? Even though the Federal Reserve is printing money, the thing that's absent is velocity of money. There are very limited transactions occurring. But as the economy opens up, more transactions occur. You'll see inflation on the rise. That's what truly creates inflation. You can print all the money in the world, but if people aren't spending it, driving up prices, then what's the problem? It's when people become confident again, begin spending, that is when That's when the Federal Reserve has some really serious problems on its hand. And that's why they're probably not even upset about the riots and the shutdown, because the last thing that they say they want inflation, but they're liars. They're absolute liars. Think about this. Paul Volcker, the last great Fed chairman, came in, rising inflation. He had to jack up rates to what, 20%? Could you imagine having to fight inflation nowadays, jacking up rates even to 5%, which is normalized? It would be insane. You'd see the utter collapse of the stock market. Unless, of course, the only way that you're going to save it is one of two ways. War, which you can't rule out. And two, manufacturing comes home. Manufacturing comes home. Jobs are here. The jobs are created here. And those people that are rioting in the streets, they go to work. They stop playing video games in mom's basement and they go to work. That's the only way you're going to do it. The miners. Bearish reversal week. Very light volume. I still like them. Silver. Breakout point failure week. I wanted to buy silver. I still may. We broke out last week. This week, we gave up support. Let's go to some, let's see what else I have to go over here. GDXJ, I already did. Cure already did. Cal Maynard did. Microsoft did. All right. Let's do some chart requests. I have to take members first. Oh, I'm getting fancy now. I love this green screen. I know people don't like the fact that it loses my arm. You can't see certain things. But this segment is brought to you by our friends over at, where the heck is it? Here it is. TrendSpider. TrendSpider is the next generation of automated technical analysis, and it is. So I met with TrendSpider management last Friday afternoon, and I negotiated a new discount. It's down below, limited, 35% off. Not the 25% I had. Now it's 35% off. There's a link down below. You need to use that new coupon code. I wrote it down there. I don't know what it is. I just copied and pasted. I forgot what it was. But you have to use that new discount code. If you have the old one, CT25Z, don't use that one. Use the new one down below. That's 30% off. All right. Let's take some chart requests here. Let me write them down. All right. I know Bitcoin, that was for TA. CLDX. Bitcoin. PRA. Okay. Richard, hey, Richard. There will be a virus news tomorrow, 100%. Richard, what do you mean in terms of a vaccine or negative? I think you may be right. Pat, I'm assuming you're going to want IBM. I know you're a big IBM guy. Pre-drag. My webcam's not on. Thanks, pre-drag. This whole time. That's embarrassing. All right, so what I'm going to do is I'm going to circle back. I want to show you my Seattle. Here. These are my Seattle backgrounds. That's the map. Thanks, pre-drag. I can't believe I forgot to put that on there. Humiliating. Humiliating. UGAZ. We're along of UGAZ just to have full disclosure. UTSL. Yeah, we got hurt on UTSL. All right. Denny, I was having fun. I thought I was being professional. I didn't even have the damn camera on. It's difficult being a one-man production team. Humbling. It's very humbling. All right. Oh boy. All right. eBay. eBay. Trisha wants eBay. All right. Okay, I got to take these in a certain order because I need to shut down promptly at 7 o'clock tonight. So let's do this. And again, brought to you by TrendSpider. Is my background? Nope, my TrendSpider background's not up. I'll be damned if I'm going to be denied of having my fun. There we go. Getting professional here. I'll get it right one day. Okay, let's do this. Bitcoin. Well, you know what? For Bitcoin, I'm going to use, I'm not buying into the store of value stuff with Bitcoin. I took a look at Bitcoin before we went live, and I don't see the value. I just don't see it. All right. So this is a weekly chart. Yeah, weekly chart. All right, so if you're looking for the Pimp Mac Daddy of resistance levels, this is one. That's a secondary. Here's the primary. Yeah, we'll leave it that way. And you can see we continue to get rejected at that secondary downtrend line. Lower highs. Can you guess what this looks like on the Ultimate Oscillator? I identified it on 3 charts earlier. The same setup. The Dow, S&P 500, and the banks. Same setup. Lower highs, triple top on this most recent leg down. So the weekly chart of Bitcoin is not looking good. And we took out last week's lows. Daily chart. Where do we close? 93.26, 92.50 is critical support. A little bit higher than that, 92.60. We're rolling over. Lower highs on Stokes. You know, I think that if the markets continue to weaken up, then Bitcoin goes with it. And you can see that there's a correlation here. They usually trade in tandem, Bitcoin and the S&P 500. So I don't see any reason whatsoever why, if the S&P 500 continues to weaken, that Bitcoin is not going to follow suit. Now, it's impressive that it bounced today. It bounced off the 50-period moving average. It closed above historical resistance. I'm not a big moving averages guy. I am a big proponent of identifying and knowing historical support and resistance, and moving averages change. So I wouldn't be a buyer here. I'd be sitting on the sidelines, to be honest. And if I had a new weekly low, I'd get out. Especially if the market's pulling back. So that's Bitcoin. All right. Let's go to IBM. IBM. Monthly chart. Bearish reversal month. Not good. Again, it's Thursday, right? And as I want to keep repeating this, the week is not in the books yet, right? At current, it is not looking good. We have engulfed last week's move. What took 4 weeks to gain, about 4 weeks to gain, we have given back in one. And that's typical of a down week. You're going to have support down here at 112.06. If we don't gap up tomorrow, where do we close today? 118.62. Let's go to a daily chart. Yeah, we broke down below support, and we closed there. Closed at the lows of the day. Yeah, I'm unfortunately negative on IBM. I think that we're probably going to see lower lows. Kat, you're more concerned about the Fed buying and shorts covering? Because you like to short. You're short the market? Let's go to UTSL. UTSL gapped right down below our stop. We have a long position. All right, so we're in ascending triangle, ascending wedge formation, whatever you want to call it. Take note of the volume up here. There's a ton of resistance above. Weekly chart. We're in a trading range. The way I'm trying to look at this market is I want to be long of things that people must have, right? They have to have utilities. You have to have healthcare. So we've positioned ourselves to get long of the gotta-haves. And utilities are one of them. So I'm okay with holding on here right now. However, if we start breaking down below monthly support levels, then I have a serious problem. The Stokes still look good here. This is a weekly chart. Higher lows. And a breakout. RSI, not so good. Not as good. But we're still holding trend. So until such time as we break trend, I'm not going to worry about a one-day pullback. I'm not going to let it bother me. Because again, you have to think about this. And I'll bring this up. And this is what is in the back of my mind. And this is why I always go over bonds with people. Let's bring up the XLU. This is the utility ETF. And I'm going to overlay for you. As a matter of fact, I already have this overlaid. This is already set up for me. All right, so here we have an overlay of the 10-year yield. And in fact, let's do a correlation. So you can see when you're trading down below the zero level here, that's an inverse correlation. They don't trade in tandem. They trade inversely of one another. So we discussed earlier, what are yields doing? Yields are crashing. So why do the utilities trade inversely of the 10-year yield? The reason is that they're capital intensive. They're constantly going to the bond market to raise funds, to expand operations, for maintenance, whatever. And if they have to compete in the markets, because remember, they're perceived as a higher risk than what are treasuries, then if that's the case, they have to pay a higher yield if treasury yields are rising. If treasury yields are falling, well, they pay less on their bonds. So that's good for them. It floats right to their bottom line. All gravy, the money they save on interest payments. So that's why I'm bullish on the utilities and willing to give them a little bit of room here. Now, on the week, well, this is a monthly chart. On the month so far, it's not looking great. I have to admit that. So might at some point we have to admit that we're wrong? Yeah. But we gap right down through our stop. I hate that. So we'll be looking for a retest of support. To see whether or not we bounce. If we bounce, we just may be buyers. All right, we'll keep this active for the next several days. So we'll let the market tell us what we're going to do here. I'm not going to get bullied out of a position because we had a gap down. We had some amateur traders who had to cover their margin debt. So UTSL, we're looking for a support level to be hit here. Manoj, I think it was Manoj that asked that, at 21, around 21.12, $21 a share, let's call it. And I may be a buyer at that level if it holds. eBay. Yeah, this is what happens. We went right smack dab into that third standard deviation Bollinger Band on a monthly basis, and we sold off. No great shock. Weekly chart. An inside week, no new high, no new low. Very close to a bearish reversal bar on the week. I think they had good earnings that came out. Daily chart. Now, we closed at support. Let's see whether or not we have any weekly or monthly support levels. Yeah, monthly support down here, but that's pretty far away. Would I buy here? No. I would entertain it if we made a new daily low tomorrow, or we gapped up and we closed above this support level at around $47.90, $48 a share. I would entertain it. Ideally, though, the market finds its footing, and this is the wrong. I can't draw an alert at this diagonal line anymore. I would wait for a breakout above, let's call it $48.50, $49 a share before I opened or added to a position. These Stokes are very long in the tooth. Be careful here. It would be great if you saw a double bottom setup off of, say, 70, rounding it up, on Stokes. That would be bullish. And it's quite possible. But this is pretty long in the tooth, these Stokes. It's had a heck of a run here. If we close down below support, if you're looking for a stop, new daily low, you might want to get out. And then we have a secondary support level down here at 46.89. If you want to keep your stop really loose, or if you're looking to buy. Let's drill down to a 4-hour chart. Yeah, we closed down below support. I think we're going to make a lower low here. Round to 47.33, 47.25, thereabouts. Maybe you overshoot and then reverse. If we open up down tomorrow, I would wait until late in the day to see how we close out the week before you did anything. Do they rally it back? Do we have a short covering Friday? You know, many times you'll see that. So at current, many of these stocks are not looking good as you proceed into tomorrow, but you don't know what they're going to do. You know, somebody posted out there earlier, you could get an announcement of a new vaccine that sends the markets up higher. Traders are looking for a reason to buy. We're still in that environment. So I don't think that a hell of a lot of damage is done to kill spirit today. If we start going into next week and we start getting limit downs, that's when people get spooked. Limit down scares the heck out of everybody, unless you're short and then you're giddy as hell. But nobody likes that when you're long. That kills confidence. IBM we already went over. I want to talk about Boeing. We booked profits on. Oh, this is the one we booked 44% profits. BRZU, we did 70%. I got that backwards before. Now, Boeing, we booked profits arguably too early at 204. That was our price target. Our actual price target was 200. It exceeded it. And it kept going. We are now back down below resistance. And my alert here expired. Let's get rid of that. I want to know if we break through. You want to buy Boeing on a down day when they're saying, will Boeing be around in 10 years, 5 years, 2 years? Boeing's not going anywhere. You want to talk about too big to fail. Boeing is too big to fail. So I want to get long of Boeing yet again, because there's nothing greater than selling high and buying back low. But first, you need confidence that you're done going down. And I'm not confident yet. I like 155.90 on Boeing. And Rick, yes, smash the like button, please. Please, I beg of you. And William, thank you. Didn't you get BA calls expiring tomorrow next Friday? No, me? BA calls? No. Oh, you're talking to Kat. I see. Okay, I see the thread. Gotcha. Sorry about that. All right, I have a couple of others to get through here, and I got to go. I'm already over time here. Prague Group. I'm going to do this quick. You can't buy these shares. Weekly resistance hit, rejected. When can you buy them? You have a continuation breakdown today. Look for a filling of the gap at $30.17. You might find some support at $34.25. But ideally, if the sell-off continues, hold out. Be greedy. Wait for $30.17. Next chart up. What the heck just happened here? DBA. The ag names have given up ground of late. They looked promising. They've weakened up. We remain in the trading range. We're at the lows of the week. Stokes looks good. RSI looks good. Maybe we'll rally back tomorrow. We bounced off of support today. If you're looking for a buy entry point, not a bad place to nibble. A better place is down at 1350. If you get a new intraday low, 1350 looks very, very attractive. I have an alert set there. But where we closed today was not bad either, and that's at 1360. That represents the rising lower band of daily support. Very nice. That's DBA. MJ. I think it was fellow member Manoj who corrected me on this. I was lazy on this one. I was looking for agriculture names that had a little bit more beta, more volatility than DBA, and I found this one. And and I saw Harvest, and this is what I mean by I was lazy. So I just made the assumption, because I wasn't ready to buy it. I didn't do any research. I just checked the charts. So I assumed that it was an agriculture fund. And so he sends me an email, because I was talking about it. I believe I had it on the watch list as well. And he goes, "Hey, this is a weed ETF." And I was so embarrassed. So I thought I'd share that and humiliate myself in front of the globe. I love being live. All right, so MJ weekly chart. We had broken out. It looked like a promising beginning of the week. And we've been rejected. So where might there be support? Right here. at around, if we get a continuation pullback, at around 1138, 1140 per share, because this is rising. Daily chart. Yeah, breakout point failure. We had broken out here on the 8th, failed to hold it, and as a rule, and this is an observation, it's a fairly reliable observation, that when you get a bull trap or a breakout point failure, normally what happens is that you rally all the way back down to the lower band of prior support. Many times it fails and it breaks that support level. So make sure this holds before you get long. Lower highs on Stokes and lower lows. That's MJ. You guys. How did I skip you guys? We own you guys for disclosure purposes, and we were up today, baby. And what you're seeing here is a real battle on you guys. I mean, these Stokes are like a coiled spring ready to rip. RSI is broken out. And today, we were up. 1388 is stiff resistance. Even more resistance is at around, let's call it 14. What is this? What's this? 1430. Let's call it 1440. You're going to close above that mark. I'd be looking to add more here. So we're already long. I'm in no hurry to go adding more until we get through this resistance. If we rally through it, I think that we could easily rally up to around $18 a share, if not 20. Will I stick around that long? Probably not. But you never know. It depends upon the strength of the move. Let's check out a weekly chart really quick. If I see volume moving in, I'll stick with it. Now, on a weekly basis, we're flirting with a breakout here. So if we get an update tomorrow, that'll resolve this. We would have a weekly breakout. So you guys is looking pretty good. And I don't think the inventories report was all that bullish yesterday yet. The shares still rallied. Okay. I'll take one more. I think I saw work, and we'll leave it off with that. Slack. Weekly breakdown. When the Corona stocks start going, you have to wonder whether or not it's concerns about the virus that caused the sell-off. Support at 29.23. Real serious support down here at around $23 a share. I don't know whether or not we're going to get down that low. Daily chart. It's had a heck of a pullback already. Look at 29.23, $29 a share. See if it reverses off of that support level. If it reverses off of it, it holds. It spends a day or two above that support level. You could look to enter there. In this type of market, one day does not make a trend, right? Because now we're breaking down below support levels. So now the market's got to prove itself worthy of investment dollars yet again. So if you hit a support level, you can nibble. However, don't go all in. Wait for it to spend a couple of days above that support level. If it holds, it continues higher, then add more. But stay small right now. Stay small. No rush. With that, folks, if you could please smash the like button. Don't forget, TrendSpider, 30% off in that link below. Use that discount code. Use the link. Smash the like button. Subscribe. And members, I will talk to you on the weekend on the Week Ahead Commentary. And everyone, have a profitable trading day tomorrow. Be well.